We have uploaded the results after our board meeting yesterday. I hope you have had a chance to glance through them. I'll of course take you through the presentation as always. So what I'll do is, in fact, straight away go into the presentation. So if you all are referring to the presentation, I will straight go to slide number 5, where it shares the highlights of the quarter, Q3 that went by. So revenue was 814 crores, which was a good, reasonably good third quarter. As you all know, third quarter typically for the industry is cyclically low. Diwali being in that month and also the year-ending December month, so obviously it's always a little low. Despite that, we had a 14% year-on-year compared to the quarter, year-on-year growth, and this growth extended 9 months to 11.1% increase in revenue, taking the total 9 months to 2,484 crores. In Q3, what is more heartening was that our EBITDA margin stood at 8.8% compared to 7.2% in Q3FY24, which is clearly a significant improvement. And as we have been sharing for several calls, we've been working on improving the margins. Based on feedback from all of you as well. So this we have been able to do. So 8.8% EBITDA margin for Q3. As you can see again on slide 5, from Q4 FY23, which is 7.1, then to 8.6, then to 8.7, and now at 8.8. If you now move to the next slide, which is slide 6, again, the same figures in a different format. Now I'll come to the industry dynamics. So in terms of passenger car, in Q3 there was the total industry sale of 11 lakhs. That is 1.1 million again, which is high as compared to 10.86 in Q3 FY23. About 4.79 million passenger vehicles were sold in last calendar year, which is an increase of around 7.7%. With sales of 4.43 in 2022. I'm talking about the calendar year. Mainly we have seen a wide adoption of sport utility vehicles and electric vehicles. However, electric vehicle penetration in passenger cars still remains very low at just about 2 to 3%. But nevertheless, the numbers are increasing. In fact, on a monthly basis now we are seeing electric vehicle sales crossing 8,000 in terms of passenger cars. Passenger car grew in Q3 FY24 mainly due to robust economic growth, new launches which happen typically during Diwali, and then in December, there are a lot of year-end discounts offered by automakers. Out of the total PVs sold, UVs accounted for 58%. So this, we have been seeing this trend for several quarters now, but now it's peaked at almost 58% of the total sale of PV is utility vehicles. So SUVs are really gathering a lot of momentum, and this momentum will continue in 2024. Yes, while there's the election year, so the growth may not be as robust as what we have seen in the past 2 years, but it will still be a decent growth that we are all expecting in 2024 as well. Coming to commercial vehicles, commercial vehicle production stood at 2.5 lakhs. So we are well on track for 1 million commercial vehicles for the year. So the industry saw a 3% increase year on year. This is definitely much lower than what we saw in the earlier years, where we had very significant growth in commercial vehicles. But now this is tapered down, but expectedly so. If you remember right, in the start of the year, we had predicted PV sales to be in just about double digits, so which is what we are seeing, and this will definitely get affected in the coming year owing to the elections. That again is based on a cyclical study that we have done over several past election cycles, where we see a little muted growth in commercial vehicles because the capex decisions as far as government is concerned take some time. And however, having said that, I think we all know the Indian economy, trend and the strong foundation that it is on. So we have, we have nothing to worry at all in terms of the longer term outlook. Coming to two-wheelers and three-wheelers, this has been, encouraging that we have seen a notable recovery in two-wheeler segment after the festive demand. The favorable momentum extended to Q3 with sales volumes reaching 55.88 lakh units, which is a year-on-year growth of 19%. The upswing is attributed to various factors, including festive season, elevated rural sentiments. As you know, the sentiments were very depressed post-COVID, but they are slowly changing, thankfully. The wedding season, of course, also played a part in this growth in the two-wheeler sales. In the electric vehicle segment, the sales surged by 34%. So this, of course, is much less than expected. When we had envisaged the EV sales pre the benefits going away in June. So after that, obviously, we have seen a speed breaker in two-wheeler sales, electric two-wheeler sales. So we are seeing only a 34% growth. With the same figure in the previous years used to be 400%, in fact 200%. So this is likely to get some fillip. We'll have to see as to what is the government stance on this. We all know also that the FAME 2 is going to, the end date is actually March. So we'll have to see how this pans out in terms of the government policy. The total domestic sales reached 2.61 million units, reflecting substantial overall growth of 14%. Domestic demand is robust across variants, particularly electric mobility. Coming back to the slides of the presentation, if we go to slide 7, this is 9-month performance. Where I had already shared that we did 2,484 crores for the 9 months so far, with EBITDA of 8.7% and PBT of 7.2%. Balance sheet cash position of 214 crores. Cash flow from operations to the tune of almost 100 crores compared to 21 crores inflow in 9 months. And capex, we incurred about 50 crores during the period. Slide 8 is again the financials in a different format. We already discussed that, so I'll move to slide 9, which is the trends. So as you can see, the good part is ROC continues to be strong at almost 32%, and margins, the improving trend is very visible here. I'll then move to slide 11, which again, tracks year-on-year performance for the past almost decade. And you can see again the trend of EBITDA margin improving, the ROC at 32%. And moving to slide number 12, again several ratios here, which again I will not spend time on. Coming to slide 13, which is the revenue mix slide. You can see that two-wheelers is now 61%, passenger car is 24%. Obviously, we are also seeing increased business in passenger car, and of course, in terms of both Gabriel business as well as the overall passenger car industry, which we just discussed. Channel mix remains largely the same, 86% being OE, 12% is aftermarket, and 2% is exports. So exports is we'll come to that slide, of course. Coming to slide number, I'll move ahead a bit quickly. Slide number 16 is the Core 90 initiative, which we have been continually discussing with you, which has been, the basis and the foundation on which we are trying to drive the margin improvement. Slide 17 shares our vision, which we had defined pre-COVID. That's why you will see it still as Vision 2025. We did not want to change the date. We all know COVID took away 2 years, but we said we'll be among the top 5 shock absorbers in the world. As far as manufacturing is concerned, this was based on 4 cornerstones: exports, domestic dominance, M&A, and technology. So I'll spend a little time on each of this as to where we are. Exports, we did about 23 crores in the quarter, which is flat. But however, here, we are working on a big order for as far as the passenger car is concerned for exports, not yet finalized. In addition, we also have, some two-wheeler orders from, two European customers, which we are working on. These are in final stages, so we are not yet able to share a firm LOI, but hopefully in the next quarter we should be able to share that, and we'll be able to convert that into a firm LOI as far as exports is concerned in two-wheelers. Coming to slide 20, which is the domestic dominance pillar. Here, I'll come to the individual, segments. This is on slide 21, which is on screen, which you can refer to. It shows the performance on two-wheeler and three-wheeler. So here again we have had 32% market share. We have also got some good new orders. We have won a previous new platform. We have also launched in the last quarter the Aprilia KS440, which is with an inverted front fork. So this is a mass production vehicle with inverted front fork by Gabriel. We also are working on a semi-active suspension with TVS. We have had several trials overseas as well as in India, and we have also won a new EV platform, from TVS. Here again, in two-wheelers, I'm glad to share that in Bajaj we have, won Platina business, which we were not there earlier, and we are also working on some other, let's say marquee brands of Bajaj for some possible new orders as well. Going to slide 22, which is the EV. It continues to be strong. I mean, our business is quite strong on this front, and we have won new orders. As I said about TVS new EV platform, we already got that. We have won the Suzuki EV platform, which will be launched towards the end of the year. Suzuki two-wheelers. The Ola motorcycle, of course, we are on that as well. So our EV penetration hopefully should continue and sustain at the good levels that we have seen so far. Coming to slide 23, which is passenger cars. So we have a 24% market share. Our market share with Maruti increases every quarter, and we also, I'm happy to share that we have won the Swift platform as second source for Maruti. Just to share that Gabriel has never been on this platform, the Swift and Desire platform, which is a very high volume platform for Maruti. But now finally, we have been able to break through as a second source. But nevertheless, we have a good opportunity to increase our relationship with Maruti Suzuki. We also have won Tata Motors Curve EV platform. That is the first EV platform that we'll be working on Tata. We are also working with Tata Motors on another EV platform, but hopefully that we'll be able to confirm in the next quarter because the discussions are yet in the final stage. We also have won the MQB 2.5, which is a new platform of Volkswagen. Currently, the vehicles that you see is MQB 2.0. I mean the Kushaq, Slavia, Taigun and Tiguan, these are actually the MQB 2.0 platform. So we have also won the 2.5 platform. Slide 24 shows pictures of the SUVs. We just discussed that SUVs form 58% of the market now. So here I'm happy to share that Gabriel is very well entrenched with all the SUVs. You can see right from the Skoda Kushaq, Volkswagen Taigun, Toyota Hyryder, which shares the platform with Suzuki Grand Vitara, the Suzuki New Brezza, the Mahindra XUV, Mahindra Thar, Mahindra Bolero, and Suzuki Jimny, and of course the Citroën PSA C3 as well. Coming to slide number 25, this is on CVs, where yes, we continue to have a dominant market share of almost 90%. So we are on all platforms that are being produced in India by Indian OEMs, and also as far as the DAF Netherlands is concerned, we are already working on axle dampers. We were only on the cabin dampers, so now that business has grown based on the confidence and the delivery from us, because we are a 0 ppm supplier. We won the award 2 years in a row. In fact, this year also we should get the award. So based on that, they've extended us to the axle dampers, which is under development right now. Slide number 26 is the railways. As I always say, the volumes are small, but we have had a good growth, and based on, of course, the recovery of the railway production, and also our share of business is going up. To a mature stage. So our growth in this has been almost 40% compared to the quarter last year. Aftermarket continues to be strong. We did about 104 crore of sale in the aftermarket in Q3. So we'll continue the good work here. We have already launched several new projects, new products as well in this, and we'll continue to do so going forward. Coming to M&A, we all know, the Inalfa Sunroof system, we have tied up with them. We announced this on May 9th, and I'm happy to share that in December, we delivered the first production sunroof to Hyundai. And in fact, in the month of January, we have started production at full scale level. So that's a record of getting the plant up to scale and up to speed. So we are supplying for the Hyundai's new Creta, which you have seen that got launched in the month of January. This is I must say, a very satisfying ramp up that we have done, thanks to the team and great support from Inalfa. These are if you refer slide number 30, you can see the pictures. We have shown the plant view. This is how the plant looks as of actually last week, and the internal view as well as of the assembly line and the polyurethane line. So we are producing here almost at the rate of 300 to 400 per day. This will only keep going up. Lastly, on the technology, we have started the tech center in Belgium in Genk. We have now moved to a larger premise, which also can develop as our workshop. So earlier it was only an office. Now it's an office plus workshop. So we can do some trial and fitment as well. We have, now, in addition to the CPO, who is Mr. Koen Rebroek, an expert, we have also added one more person, expert in this suspension field, who has also worked with Formula One racing teams. He is also on board, and he operates out of Belgium. Coming to the tech center, while we had, if you refer slide number 34, we have seen the picture of the new tech center in four-wheeler as far as Chakan is concerned. So we have also done a small facelift of our Hosur tech center, which we had inaugurated in December 13. So we decided that we should also do a refresh and renovation of the tech center. So that is complete now. So not only have we done a facelift in terms of aesthetics, we have also increased space inside and added some more validation equipment so that we can meet the market demands much faster. So that's about the two-wheeler tech center. And just if you go to slide number 36, we won the Bajaj Award, Platinum Rating Award for two of our plants, both Chakan and Nashik. Both the supplying plants won the Platinum Award, which is really, we are very proud of the same. At the CII convention in Hyderabad, we won the Manufacturing Champion Award, and also I'm happy to share the Sustainability Champion. The sustainability is, of course, very, very dear to us as a company, as employees, and as a group as well. We continue, leading a lot of efforts in this particular aspect, and looking at every investment that we do or every product that we make with the lens of sustainability. So I'm glad to share we got an industry recognition for the sustainability. We already had an award from Royal Enfield for sustainability. So we'll continue our efforts to improve our journey on sustainability. Just to share, we have just released our ESG report, which is which will be on the website very shortly. We already finalized the report, and you will see it on the website very shortly. So that's quickly about the quarter that went by, and you will see on the other aspects which I shared with you. So I would now end my address here, and keen to listen to your feedback and your suggestions. Now, thank you. Over to you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. The first question is from the line of Mumuksh Mandlesha from Anand Rathi. Please go ahead.
Yeah, thank you so much for the opportunity, sir, and congratulations on the healthy margin performance, market share gains, and the robust order wins, and also getting the Sunroof plant ready in a short period of time. So my question is on the Sunroof division. Can you provide more update in terms of new orders or RFQ wins from the Korean and other OEMs? And also the first model which we are supplying is seeing a robust demand in the market. So how do you see the revenue in the first year? And lastly, can you also update on the status of JV formation?
Okay, thanks, Mumuksh, for your appreciation. Coming to the Sunroof, your question specifically in terms of orders for Koreans, so as I said, we are right now supplying for the setup specialist, and we already got the order for a new Kia platform which we're working on. The ship of that will be in 2025, early 2025. So that is what we have in hand right now. In addition, we have got RFQs from because this product, of course, we can get only when a completely new vehicle comes on to the planning stage as far as OEM is concerned. So we're working on RFQs from 2 other OEMs right now in advanced stages. So we'll have to wait for maybe a month more before we can confirm anything on that front. But very good interest from all OEMs in terms of extending RFQs or showing their interest. And in terms of your last question of what could be a likely order, I mean Mumuksh, that we do not share any guidance in terms of revenues, so I really can't do that. But happy to share that the Sunroof plant has started producing at as I said, currently at almost a level of 300 to 400 per day.
Got it, sir.
JV formation was your question.
Yes.
Right?
Yes, Mr. Goyal, sir.
Yeah, I mean, the file is moved from the Ministry of External Affairs to MHI Heavy Industries. I mean, it has been cleared by both of them. Now it's gone to the next stage. So I think maybe, hopefully by next quarter quite surely by next quarter we'll be able to share something positive on this. But however, as we had discussed, we have a TLA with Inalfa till the time the JV is formed, and I must say that we are getting excellent support from Inalfa Korea and Inalfa Netherlands as far as this is concerned, and in fact this kind of SOP ramp up would not have happened without their very strong support. There's a lot of expats operating from Chennai plant, and now yes, I'm happy to share that most of the expats have left, and it is the Indian team largely that is now delivering this stable production demand.
Got it, sir. So can you also provide an update on the new product line opportunities which we are scanning, and when we can see the next coming, sir?
Yeah, I think we are actually working on a couple of them right now as we speak, and as we had discussed, we are told in the coming financial year, our target is to announce at least one more. That we are working towards that target. But right now I can only share that we're actively working on 2 opportunities.
Got it, sir. So on the EV side, we're seeing the E2-wheeler, E3-wheeler revenues growing at 40 to 60% growth. Can you indicate how you seeing the key customers like Ola, TVS and Ather planning to ramp up EV production in next 1 to 2 year perspective? And also, how are you seeing the getting orders from Bajaj for the EVs and the super premium motorcycle?
What is your question on Bajaj?
On the how are you seeing the getting orders for the Bajaj EV models and the super premium motorcycle models, sir?
Okay. Yeah. So in terms of EV business, I think all the OEMs have, especially the top ones, they've given a robust order book for us. TVS is ramping up, Bajaj is ramping up. So we don't supply to Bajaj EV, but Bajaj also has plans of ramping up. Ola has, not only ramping up, we are also seeing that in terms of their market share, and they continue to be number one. Ather also has given demand projection. So we are seeing overall a good demand projection. But yes, as I said, we'll of course have to see what happens after March, because while we had done the same prediction earlier, but after June we saw things change. So if there is no change in terms of the benefits being extended by government as far as FAME 2 or if there's any FAME 3, we really don't know how it goes. So we'll have to wait and watch. But the good part is the battery prices have come down, lithium prices have come down. So you're already seeing some correction in particularly the passenger vehicles. Yesterday MG Motors dropped their price by over 1 lakh rupees. So we see that if that continues, then even if the benefit goes, the demand for EVs will continue to be robust. So that's on the EV front. And in terms of Bajaj, I mentioned yes, they are planning to ramp up the EV, but we are not on Bajaj EV, on the Chetak while we are discussing something, but we are not on Chetak right now. As far as the motorcycle is concerned, we have got the Platina, and we are working with them on some premium models as well.
Got it, sir. Just to distribute, sir, can you share the CapEx guidance for FY24 and 25 for the standalone and the JV? That's all from my side.
So the usual number of 120 odd crores is what we are planning for this year, while we have still not formulated our budget, which will be that in March. And for the JV at this point we have 2 programs. So depending upon the LOIs, we would be investing. But as of now, 80 crores of investment have already gone into the JV.
So you mentioned 80 crore, right?
Yeah, 80.
Okay, sir. Thank you so much for this.
Thank you. The next question is from Nihar Shah from Enam Investments. Please go ahead.
Hi, sir. Thanks for the opportunity, and great to see the margin and new orders coming through. Just had one clarification that I wanted on the expansion plan that you mentioned. So that slide talks about the electrodynamic dampener. Can you just throw some light on if this is a new product or a new type of suspension that we're developing, or if it's already been in production, and how do we see the future with this?
Are you talking of the adjustable electronic hydraulic damper, right? That's what you're referring to?
Yeah. So this is you've mentioned electrodynamic dampener on slide 14. So just wanted to check if that's the earlier adjustable dampener, or is this something that's developed new by Gabriel?
No, it's actually this is the capex. This is not the product. So what we have listed in 14 is the capex for FY23. So it's an electrodynamic damper testing machine.
Okay. Got it.
Yeah. So fuel damper. But since you raised the question on the electronic dampers, we are fine-tuning the final round of fine-tuning for the XUV we are doing, which is a demonstration product mainly for Mahindra. We had already done that and shown to the Mahindra tech team, including the CTO. The initial feedback was good, but now we are refining that in Europe. And on the two-wheeler front, there has been, I must say, surprisingly very good interest in this product. And we had a joint tuning exercise with TVS team in Belgium. They actually came to Belgium to do the ride tuning themselves and check it out. And now we are also develop the same thing in India so that we can do more testing here in Hosur. So let's see how it goes. It's early days for two-wheelers, but I must say we are, surprisingly and pleasantly quite happy with the traction it has seen in two-wheelers.
Wow, that's great to hear. Also, a couple of questions on the order wins that you mentioned. So one is on the Swift platform, right? I mean, that's a big volumetric platform. What is the typical share that a second source gets in this kind of orders?
Well, typically, it's, they operate on a 70-30. So the second source gets 30%.
Understood. And is anything changing from, the Bajaj Auto side? We typically in a lower share of business with them. Is something changing in terms of, order wins on the Platina and other premium side that you're discussing on that?
No, I think, the only thing, as you saw, we got 2 awards and we've been getting this Platinum Excellence Awards for, quite some time now. So as far as our quality is concerned, we are quite well rated in Bajaj. So I think it's, somewhere when you start delivering a, good product consistently, obviously it has to show some result, a positive result, I mean. I think that's what we are seeing. Hopefully, we should convert this opportunity. So Platina is a good start, and I'm sure we'll be able to do something more.
Got that. And the last question from my side is, recently we've had a couple of exchange filings regarding a lot of management reshuffle that's happened in Gabriel. Can you just talk about the transition that's happening and, and how they are going about that, any changes to the structure?
So, these are actually regular changes that we do, not only at Gabriel, but even at group level, where it's career planning, of individuals. So this is, in fact, as you know, this is one of the strengths of Anand Group. So we have got, my Sunroof plant head is, the deputy CEO is from Anand Group company, because we wanted a resource who could come on board without affecting the Gabriel team. So we got it from Anand Group as a career planning for his own sake. Similarly, Atul Jaggi, who was our deputy managing director, he will be moving to Mahle Filters to head that business as MD, which is our JV with Mahle of Germany for air filters, oil filters, and fuel filters, and also some more air intake manifold and some new EV products which the JV the partner has. And we already, and Puneet, who was heading the two-wheeler, also moved on to another smaller JV of Anand, which is with Haldex of Sweden in the commercial vehicle space. So we already replaced that. So we had a fair bit of planning done. So we are happy that Anand Sontakke, who was headed both business development and sourcing in Mahle Thermal Systems, and then he moved to Mahle Filters as head of the P&L, and he had moved out of the group, and he's joined us back, a very very seasoned professional and proven track record. So he's joined us as the head of two-wheeler business. So these are changes, but happy to share that we were able to attract one of our good talent back into the group. So he'll take over the two-wheeler business. The rest remains the same. There was one more change that Vijay, who was our head of quality, he superannuated. We had extended him by 6 months. So we had planned that, and we moved one of our resources named Abdul Wahid, who was earlier in supplier quality and again a very good performer. We have moved him into the place of Vijay as planning for as part of succession planning.
Sure. Yeah, thanks for the answers and all the best.
Thank you.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from the line of Viraj Kacharia from SIMPL. Please go ahead.
Thanks for the opportunity and congratulations on good set of numbers in such a challenging environment. Couple of questions. Firstly, if you can just give some perspective in terms of the share of Gabriel in the premium motorcycle or premium two-wheeler space, and similarly in the higher ticket space in PV. So, based on the pipeline and the order wins we have currently, how our share would have changed?
Okay, yeah. Thanks, Viraj. And it was nice meeting you at the Bharat Mobility Show.
Yes, sir.
So yeah, we did discuss on the sidelines as well on several aspects. So on this particular question on the share in premium, we don't have it offhand right now, but we can revert back to you. But just to share that in the premium segments, in terms of the passenger car, we just shared that picture of the SUVs that we are there, which is a high growth area. So we are there on, absolutely all they're not premium SUVs, but the higher end SUVs which are sold in India. So right from the Suzuki Grand Vitara and the Toyota Hyryder, which is offered in the hybrid version. The demand is very strong there. There's a huge waiting list. The Skoda Kushaq, the Volkswagen Taygun, the Mahindra XUV, Mahindra Thar, and the Suzuki Jimny. So these are all, I must say, they are all on the higher end of the SUVs. So we have if you can refer to slide number 24, you can see that our share is 35% on the utility vehicles. And if we get premium utility vehicles, this in fact will be even better. But let me revert back to you on both these points separately.
Sure. Now this on the initiatives in export and aftermarket, right? Some time back we shared this aspiration of more than 20-25% of revenue from these two segments put together. Exports, we earlier talked about us engaging at advanced stage with respect to VW and few other OEs for supply. Any update you can give in terms of export, if any of those has materialized?
Yes.
On the PV side? And sorry, yeah.
Yeah, so I can tell you that, and I already shared that it takes time, but both two key OEMs. In fact, we have had one very important visit last week by one of the OEM who is a global purchase head for the entire OEM for the entire globe as far as this commodity is concerned. We had his visit, and it was a very, very positive visit. And he's assured that we will look at opportunities globally. So it's a good first step, good breakthrough. And the second OEM which we are discussing with, they are visiting us in the next week, not next week, on 23rd to be precise. So again, the head of that commodity globally, she is visiting. So that will also be an important thing, which will definitely, pave a new way as far as our exports with these two large globally large OEMs are concerned. So I can only share this right now. Both are on positive. We have been working on both of this, so it's on the right track. Yes, it will take time. One of them will materialize faster, surely. I can say, we can get an order in hopefully in the next 3 months. The other one may take a little more time. But yeah, positive developments on both the OEMs which we have been working with.
Okay, so these are typically single model, single plant order, or when you're interacting at the global level, these are more spread across plans or models, typically interactions? Okay.
Geography, in fact.
Just two questions. In the past we talked about pricing as a strategy to gain share back in PV. And last few calls we've been talking about recovering the pricing piece. So in terms of the profitability in the PV, the thinking was to bring it to a normalized level as what you see in two-wheelers and others. So in that journey, where would we be now? And incrementally, when we're getting these new orders or we're bidding for new pipeline, is that strategy still by and large there, or now we have more evolved in terms of the overall offering or solution, and that's where the position is?
Raj, Rishi, your question had the answer in itself. Two-pronged strategy broadly. One is where we require a customer penetration or a model penetration, there the strategy of price may be required. Having said that, the Core 90 program thereafter kicks in to ensure that the profitability is normalized. Happy to share that YTD December has been very heartening in terms of the profitability margins for passenger cars. Are we there where we want to be? The answer is no. There is still some scope of improvement there, but we've seen significant improvement in the margins of passenger cars.
Okay, just two last questions. One is the aftermarket.
Tanya, maybe request you to rejoin the queue as there are several participants. Thank you. We move to the next question. The next question is from Shashank Kanodia from ICICI Securities. Please
hi, sir. Hi, sir. Good morning, and thanks for the opportunity. Sir, just wanted to check on the sunroof part. In one of your comments, you mentioned that the ramp-up of these facilities dependent upon the new model launches. Whereas I think the initial standing was that we have it's an import substitution product and ready market given by Kia and Hyundai. So if you could please clarify.
Yeah. So Shashank, let me clarify that this is an import substitution, of course. Like this Creta, the new Creta that has been launched, so it's an import substitution from them. In fact, we have some import stocks which we'll get over this month, and it will be a complete switchover to localized production by IGSS in Alpha Gabriel. Similarly, Kia EV is the same. But in terms of new models, obviously when they develop a new model, it will be from day one with the localized sunroof.
Right. So, sir, we will still be qualifying to supply to existing Hyundai and Kia models, right? Just let's say Kia.
We have been approved as a supplier by Kia completely.
Right. And sir, since you mentioned that you already operating roughly 400 units to a day, so by FY26 we should expect this plant to ramp up to its full capacity of 2 lakh odd units?
By 26.
Or do you expect that to happen in 25 itself?
Again, these are subject to volumes of OE, naturally. But this is, as I said, this is on a single source basis. So, whatever the OE makes will be with our sunroof assurance that we have. But in terms of how their volumes, as far as the end market is concerned, we can't take a guarantee. Based on the volume indications that we have, FY26 should be close to our capacity.
Right. And so at that peak levels, what kind of EBIT and PAT margins you're supposed to make?
Pardon?
So at that peak capacity of in FY26, what is the EBITDA margins and PAT margins that we intend to clock?
The double digit is what we are targeting with 2 lines and 80% capacity.
Right. Thank you. And sir, one thing on the two-wheelers front, so the PV and the PV guys have largely alluded to some amount of demand slowdown. But two-wheeler space is picking up well. So your assessment of the two-wheeler industry and with all this market share gains, can we supposed to go in double digit in FY25 in terms of revenues?
Yeah. Revenue growth?
Yes, sir.
Well, again, as I said, we don't share, but yeah, that's the idea. We've always, over the past several years, we've been trying to stay ahead of the market growth, which we have done. So yeah, that will be the endeavor for sure.
Right. And so any aim for double-digit margins in terms of timeline, let's say 2 years, 1 year, anything you can quantify?
Well, it has been good in this year. So we certainly will go to 9+% this month. So double digit would be one more year.
Okay, so FY26 is
what? I won't specify a year, but yeah, that's the idea.
Thanks, sir. Thank you so much, sir, and congratulations for a good set of numbers and all the best.
Thank you. Next question is from Arko Pratimpal from Sanjay Agarwal Broking. Please go ahead.
Good morning, everyone. Am I audible?
Yes, you are.
Okay. Thank you for giving me this opportunity. Based on your latest result, what is the corresponding volume growth rate? And additionally, how much does the price decrease or increase in that quarter?
Sorry, could you repeat your name? I couldn't get your name.
My name is Orko and I'm calling from Sanjay Agarwal Broking.
Orko. So your question is, also can you repeat your question?
Yeah, sure. Based on your latest result, what is your corresponding volume growth rate? And additionally, how much does the price decrease or increase in that quarter?
So, although essentially a large part of the reduction in sales as compared to the second quarter is owing to the decrease in volumes. There is a reduction in the commodity prices to the extent of 8 to 10 crores, which have also reduced the value of sales that you see for quarter 3.
Okay. And one thing I want to ask is that what led to the increasing operating margin? Could you please elaborate on any potential changes in OPM that might be anticipated for this current quarter?
A lot of things here. We've been speaking about this in all the investor calls thus far. We have a Core 90 program. Largely, it takes care of all the heads of P&L and the working capital management. We have dedicated groups which work on that throughout the year in order to reduce the cost or improvement in margins. It includes customer price corrections. It includes reduction of wastages. It also includes a digitization and an automation journey for improvement in the operating efficiency. So these factors, we have been doing it for the last couple of years, and the results of which are now visible in a quarter where the volumes were lower, and yet we could maintain our EBITDA margin.
Okay. And my last question is, what is your expectation about the demand scenario of the current and coming quarter compared to last quarter?
So typically, also the last quarter is fairly robust. Jan, Feb, March is, I would say, it would be, if you want a comparison, it will be more like Q2. Not as good as Q2 because Q2 has a festive season sale, but definitely somewhere in between Q3 and Q2.
Okay, I understand. Thank you.
The typical cycle that the industry follows. So I don't see any issues with that. And going forward for next year as an industry, we, as I already mentioned, due to the election year, we won't see as good a growth as we saw in FY24. There will continue to be good growth in terms of two-wheelers and passenger cars, but maybe CVs may see a little bit of a flattish growth. That's what we're expecting.
Okay, I understand. Thank you, sir. Thank you for the information.
Thank you. Before we take the next question, a request to participants to please limit your questions to 2 per participant. Should you have a follow-up question, we request you to rejoin the queue. The next question is from Viraj Kacharia from SIMPL. Please go ahead.
Yeah, thanks for the opportunity again. On aftermarket piece, so if you look at the presentation, I think a majority of the business is still driven by shock absorber and related products. So one has to understand the growth in terms of, say, product or distribution, both in India and abroad. What will drive the growth in this business? So last few years we had a very good execution and growth seen in the business, but if one has to look next 3-5 years, what will be the drivers of this business?
The vehicle park only continues to increase. See, while we have seen, the sale growth in passenger cars and two-wheelers as far as OEM is concerned, but if you see, particularly in passenger cars, the second-hand car sale has been actually the highest ever. So if you add that, there has been a huge increase in overall, purchase of cars, and when you buy second-hand cars, obviously there is scope for some more aftermarket parts getting into, because people would want to refurbish the cars, and I don't think this will change as long as the vehicle park goes on increasing. The aftermarket demand will continue to do.
Hello. Hello. Hello.
Participants, please stay connected. We seem to have lost the line for the management. Please stay connected while we reconnect the line for the management. Participants, thank you for patiently holding your lines. We have the line for the management reconnected. Over to you, sir.
Yeah, thank you. So sorry, the call got dropped, it seems. Viraj, we are answering on the aftermarket piece. As long as the vehicle park goes on increasing, which is increasing both in terms of the new car sale and the second-hand sale. So we see the aftermarket demand continuing to to continue to improve.
No, so what I was asking you in terms of either in terms of say gaps in the portfolio or any other new product you would like to add, or even in terms of distribution, right, in India or what piece of you do you still see gaps or compared to where the potential would be? Just trying to understand in that sense.
We are adding new products. In fact, in next year we have already identified couple of new products to be added to our kitty in terms of the aftermarket. So we are one, we do the scanning ourselves, and we are in touch with our dealer and distributor network as well as to what they would want us to add, because we also have to be alive to their needs and requirements. So we keep doing that, and we should be adding a couple of products next year to our aftermarket kitty.
In terms of second question on the JV piece, the understanding was that in addition to Creta, we would also be supplying, so there will be an import substitution of the new Seltos as well. So initially we will start with 2 models, and then further ramp it up in terms of new wins.
No. I think this was not understanding. We have clearly stated that we have got the localization of the new Creta, which is what is currently in production. And the second we said was a new platform of Kia, not the replacement of Seltos.
So if you want us to look at, say, for Inalfa, of the Kia, Hyundai portfolio in India for now, what are the models they would be supplying? And if one has to think in terms of, say, import substitution of those over the next 2-3 years, what can come to us in terms of a JV?
Yeah, so Creta is one, which is a major platform, and in fact the new Creta facelift also, which is planned maybe a couple of years down the line. Even that is very likely to come our way. Obviously, Kia, this new platform is there, and we are working on something new with Kia as well. There are some platforms which we are not there currently, but those are mainly, I would say, the TVS type, the smaller sunroof.
Viraj's question is that is there any other, if I'm correct in your understanding, in Alpha currently does not supply to any OEM in India other than for Hyundai Creta program, and thus the import substitution in this JV was meant for Creta only. The rest of the programs are all that we will win in the JV itself.
Okay, I understand. On margin, when you said double-digit EBITDA margin for the JV, so, based on the order which you're seeing right now, the daily run rate, already at a healthy utilization. So this margin is based on the assembly setup which we have currently, right? But as we kind of see an improvement in scale and increased localization, on a mature basis, what is the margin in this business?
We don't give those guidances, Viraj, so unfortunately difficult to fathom. But to tell you that because it's a localization of a line or a product that is already there with in Alpha in Korea, there is not a very steep improvement in margins because of operating efficiency coming along. So the volumes will also drive additional cost of capex and overheads as well.
Thank you. Before we take the next question, a reminder to participants to please limit your questions to 2 per participant. The next question is from Jyoti Singh from Aryan Capital. Please go ahead. Jyoti Singh from Aryan Capital, you may go ahead with the question. There seems to be no response from the line of Jyoti Singh. We move to the next question. Next question is from the line of Priya Ranjan from HDFC Asset Management. Please go ahead.
Yeah, thank you, Manush and Rishi. Just 2 questions. One is on what will be our share of, the EV share in our total revenue right now, and secondly, on the electric suspension side, electronic suspension side, what will be the kind of ASP increase if we go for the electronic suspension from the conventional one? What can be the ASP increase you can envisage, and when do we expect that at least a couple of these models, in 2-wheeler and in 4-wheeler, we will start SOP?
Yeah, Priya, thanks. So, as far as your EV share in our business right now in the sales is roughly, it's growing, but it's roughly about 5%, which is very similar to the market penetration that you are seeing, in India. It's 5%. In fact, just yesterday's article I read was 5% penetration. So we are at pretty much the same level. That is what we're seeing. And your second question was on the semi-active suspension.
Yeah.
So there, yes, there is a significant bump up in terms of price. The price is almost, it will go to almost 3x. Whatever is the price today, it will be almost 3x that price for the semi-active suspension. Right. Now, your last question about when would be the likely SOP for TVS, it's right now, even they have to get convinced in the product and the concept, and yes, also the price will have to be absorbed by the customer. So I don't think it will happen before at least another 2 years, not before 26.
Okay. And when we talk about the new products, so one product which we have got, the Sunroof, which is we have gone through the joint venture route. So the next 2 products which I think you are actively